For several years now, I have been doing videos on PayPal. Over the past year or two in particular, I have been particularly bearish on PayPal stock. In fact, 11 months ago, I said, do not buy PayPal stock until you watch this. And we focus primarily on the technical chart. And it's funny, if you go back and read the comments, they will make you chuckle a little bit as people continue to buy the dip on this one as it was a falling knife. Now, more recently, just a couple of months ago, when the company announced their Q1 numbers, not a lot of people are going to realize this because this videos that I do where I trash the stock or I put Jeremy in the thumbnail, they're going to get a lot more views, 13,000 views, 17,000 views. When I turn bullish on PayPal's prospects, that video only gets 6.6 thousand views. Guys, money is to be made. You don't have to stay bearish all the time. Now, what has changed with PayPal? I tell you what, over the past year, I've been more bullish on a stock like Bank of America, and I would bring it up in my bear case videos on PayPal, and people would laugh at me. Well, over the past year, shares of Bank of America are up 28%, dramatically outperforming PayPal, which has seen its shares fall. Yeah, fall 15% over the past year. But I think things are changing for PayPal. We're seeing it show up in the technical chart, which is played out perfectly and is giving you a perfect indication on when you should buy PayPal stock. We'll talk about that. Also, fundamentally, maybe some small changes in PayPal's business, maybe some small momentum. We'll talk about that as well. What is going on, investors? Hopefully, guys are doing well out there. I'm not always right about stocks, but when I am, I'll be sure to tell you about it. Revenue for PayPal in the most recent Q2 came in at $7.9 billion. That was 8.2% growth year over year. Tell you what, when you look at this company going forward, it's not like wildly impressive growth, but you look at anybody in the financial sector, you're not seeing kind of this massive acceleration in terms of growth rate, kind of high single digit growth rate expected for PayPal out really into infinity. They also gave us Q3 guidance, which really didn't upset any of that view. The company is not wildly overvalued. And this is the argument that most people make is look, when you look at this on a forward price to earnings basis, price to anything basis, you've got a $60 billion company putting up, $8 to $9 billion worth of revenue, depending on the quarter. And they are profitable. They have operating cash flow. You're trading at just 14 times forward price to earnings. So when you have companies like this, they're executing a buyback. Over the past year, they repurchased about a $1.5 billion worth of shares on a trailing 12-month basis, returned about $5 billion, retiring about 82 million shares. If this company continue to do that, they can create a floor underneath these shares, and I think you can have outperformance. Not outperformance compared to NVIDIA, not outperformance related to the tech sector, but outperformance related to your alternatives, like a Bank of America, like even a Visa, which over the last year has seen its shares rise by about 10%. PayPal can finally catch up from a performance perspective. Now, speaking of the performance, revenue, like we talked about, came in at $7.9 billion. It was 7.3 a year ago. This is not going to blow anybody's doors off from a revenue growth perspective. It's been unfortunate for PayPal that they just have not been able to layer on any other businesses and services to be able to accelerate this growth rate, which would then in turn accelerate the multiple. That's Visa's multiple. You see, Visa's trading at 26 times because they have other parts of their business that are actually rapidly growing. PayPal just isn't there yet. Now, could they turn that around? They have new management. That is certainly something that could happen. What PayPal has done a nice job of is put a bandage over the bleeding, and that is other types of costs, sales and marketing, technology and development, general administrative. You look year over year, you're staying roughly flat. You do have higher transaction expenses, but your total operating expenses over the last year, you grew your revenues by, we'll call it $600 million. Your operating expenses ticked up by about $400 million. That drove higher operating income from $1 billion up to $1.3 flow down to net income, $1.1 billion. This is a Q2, so you get a 6-month view. It's running at that constant run rate. As you move into the fourth quarter, the holiday shopping season, that's probably typically your best quarter as it relates to revenues and certainly profits for PayPal. Wall Street's expecting about 8.5 in that holiday shopping season. I mean, solid results, not, tech-like or anything like that, but solid enough for this company. Now, also solid is their operating cash flows over the last year increased to $1.5 billion. Some of that has to do with the way they accounted for different types of loans that they are originating and maybe holding for sale and maybe purchasing for sale. They repurchased, like we talked about, $1.5 billion worth of stock in the most recent quarter. That compares almost identically to where you were a year ago. It looks like that's the pace they're on every single quarter. So they're in there creating a floor underneath that stock. I think we're going to see that from a technical perspective as well. They're not having to do a lot of other investments in their business, unlike maybe other financial institutions, which may have to build out different branches, or certainly you look at maybe others out there that have to invest in a lot of software or server infrastructure. PayPal really doesn't have to do that, and so the more operating cash flow they can generate, the more they're going to be able to use it for shareholder-friendly things like buying back the stock. They just simply have not been able to do the acquisition thing, and maybe that's something that can change in the future, because that's really the only way for this company to really turn things around, in my opinion. Now, from a balance sheet perspective, they've got plenty of cash, very few liabilities. Those things are really, really good. When we come down here and look at kind of a customer granular level, you did see an acceleration in transaction revenues quarter over quarter, obviously year over year as well. In terms of active accounts, those have stayed flat. And so that's what's just letting you know that just PayPal as a company has just kind of, I think, reached a plateau. Some might even say a peak in terms of their business. Everybody that's a customer of PayPal or Venmo or both just is already a customer, and they're just not able to drive any more customers there. So they have to grow the company one way or another. One way to do it is artificially by buying back the shares. That'll increase your EPS, should increase the value of the company. The other way, obviously, as we've talked about, is through acquisition. This company just never has been able to do that. Number of payment transactions just ticking up nicely, kind of quarter over quarter and year over year. So they are squeezing out a few more transactions and payment transactions per account. So the customers that they do have, they continue to monetize them. I tell you what, if you see, though, a flattening of active accounts and then those active accounts start using PayPal even less, that would be a dramatic problem. So that's your downside risk as it relates to PayPal. But from a balance sheet perspective, that will insulate the company to a certain degree. Now, we have talked about numerous times, every single time I've done a video on PayPal, everybody wanted to talk about this, that, and the other, but it really just came down to the stock chart. When you see a stock chart, particularly like this, where you had some highs up here and you had a cascading effect, this is otherwise known as a falling knife. You don't want to catch it. You made lower lows, lower highs, and you did this for well north of about 2 years. What you wanted to wait for, and I said this numerous times in all of our videos, you can go back and look. I'm not just saying this kind of Monday morning quarterback stuff. You wanted to wait for the breakout, finally for the shares to show that they traded at a higher highs. More recently, you've done that. Now, the stock has continued to slide, but more or less, you've started to flatten out. I think you have a bed of support for this stock right in that $59, $60 per share range. Possible that you're starting what could potentially be a new uptrend. You'd like to see this stock in the shorter term, probably over the next couple of weeks, push into that $70 range, even $72, $73 range. That would give me a lot of confidence that, yes, this downtrend is absolutely over. These were the lows back in October of 2023, and now you're starting not necessarily a very steep uptrend, but one that kind of shallowly kind of churns higher over the next several quarters, maybe even the next several years. Because again, you have a firm foundation underneath this business. From a balance sheet perspective, it's very sound. From an active account perspective, we're not seeing a lot of growth, but it's a firm foundation. They continue to monetize those accounts. And on top of that, the company, I think, is doing the wise thing. Instead of trying to find some other way to grow the company, they're just simply buying back these shares, which at the current time are trading at just 14 forward on the earnings basis. And that's how you're going to grow this company going forward. It's not sexy. It's not exciting, but neither was Bank of America a year ago when I was recommending this one. And believe it or not, it's outperformed a lot of tech companies, including Microsoft, over the last year. So if you get these financial institutions at the right price, you can get outperformance. And I'll maintain a buy whole rating on PayPal going forward, which we announced about 3 months ago during their Q1. Folks, that was PayPal's Q2. Hopefully you guys enjoyed today's video. I'll be back with SoFi probably later on the day on this channel as well. Good luck with your investments.